If I were to tell you that the money you think you have in your bank isn't yours, I'd be technically correct right now. When you open an account, for the most part, the bank takes the money and provides a promise to return it to you, sometimes with interest. But technically, it becomes their asset and also their liability. They owe you. If it's a demand deposit, you can write a check or use an ATM card or make a withdrawal to get your money out. And this is only a concern if the bank goes out of business or is closed by regulators. Even then, you likely have FDIC deposit insurance that covers up to $250,000. That provides stability and peace of mind. But it doesn't change the fact that under the law, in the terms that you agreed to, the money in your account isn't officially owned by you. I know, that sounds strange, but it's true. Let me read the explanation from SGR Law. It's a New York law firm that they published on their website. They say, take a look at the balance in your checking or savings account. How much of that money actually belongs to you? You may be surprised to learn that in New York, and this is true in other states, the funds in a general bank account do not technically belong to the depositor. At the moment of deposit, the funds become the property of the depository bank. Thus, as a depositor, you're in essence a creditor of the bank. Once the bank accepts your deposit, it agrees to refund the same amount or any part thereof on demand. What that means is the bank can take your money and they can loan out your deposit, essentially giving you an IOU, a promise to return your money plus interest. Then, as long as the bank remains solvent, you can access that money anytime you want or need. The systems work pretty well in America, with an occasional hiccup that the FDIC helps resolve, as they did when Silicon Valley Bank failed a couple of years back. But this is not why I'm saying that what you think is your money may not be. And no, I'm not getting ultra-spiritual here. As a Christian, I know everything belongs to God, and I'm merely a steward serving Him. That's true. But that's also not what I'm referencing here. What I am saying is that in a recent court filing, the Justice Department of the United States of America made an extraordinary claim that the money in your wallet doesn't even belong to you. The implications of this are frightening. You work hard all your life and save some money, but it doesn't belong to you? In this episode, we're going to unpack what that all means, your rights as an American, and a simple solution that can guarantee your money stays yours. To understand the problem, we'll have to look at exactly what the Justice Department said. This was in response to a court case filed last December. The title was United States District Court, CS Lawn and Landscape versus the U.S. Department of Labor. By way of background, a landscaper was investigated by the Department of Labor. They then ran a trial inside the agency and fined him $55,000 with the force of law. Now, I have no idea whether or not he should have paid that fine, but I do agree with the Institute for Justice that the way the fine was imposed was problematic. Let me read what they said in their landscaper's defense. When the Department of Labor decided to fine Chuck Sane tens of thousands of dollars, Chuck did not get to make his case to a jury of his peers or even a real federal judge. Instead, the agency's own employees served as a prosecutor, judge, and jury. Chuck's a small business owner. For the last 40 years, he's run CS Lawn and Landscaping near Annapolis, Maryland. His administrative odyssey began in 2015 when the Department of Labor investigators first showed up at his business, and it ended in 2022 when DOL's in-house agency judge imposed $55,000 in liability. In all, Chuck spent 7 years fighting inside the agency. Worse, when DOL finally imposed that liability, it based the vast bulk of that on the fact that CS Lawn rented an apartment to some of its workers that was located in an area not zoned residential. In other words, DOL dragged Chuck and his company through years of expensive agency proceedings because of an alleged violation of a zoning ordinance. Now Chuck is joining with the Institute for Justice to demand his day in court. Under Article 3 of the Constitution, Chuck should have been entitled to have his defense in a real federal court with a real federal judge. And under the 7th Amendment, he should have been entitled to make his defense before a jury of his peers. The administrative proceedings in this case trampled on both rights. Now that's bad. We can't even imagine how we could have gotten to this outrageous point where the government says they can take your private money at will.